As normal, please have a read and we'll have to do a few calculations.
Okay,
Go.
so Greg commenced to trade as a graphic designer on 1st of November 2015, preparing accounts to 31st of October 2016, and annually hereafter until after a very difficult final trading month, he ceased trading on 30th of June 2020. So I think with losses, it'll be different for when he ceased trading and what's available to him whilst he was trading.
Exactly. So terminal loss relief is basically what we're looking at.
Okay.
Under Section 89, terminal loss relief. And under terminal loss relief, the final 12 months of trade can be carried back on a LIFO basis to the previous 3 tax years.
On a LIFO basis. Okay. So his results during the course of his business were as follows. So for the year ending 31st of October 2016, he had a profit of 96,000. 31st of October 2017, another profit of 120,000. 31st of October 2018, profit of 80,000. 31st of October 2019, profit of 54,000. However, on the 30th of June 2020, a loss of 60,000.
Excellent.
Greg's other income for the last 3 years were as follows. So he had rental income over the years of 4,000, 10,000, 24,000, and state pension of 4,000, 6,000, 7,000. Greg reached the age of 65 on 5th of July 2018, on which date his state pension began.
So the requirement is, so effectively, we've got some other income as well that we need to consider, rental and state pension. Greg reached the age of 65 on 5th July, on which day his state pension began. So that, so we need to calculate the income tax and NICs. So that basically is saying that class 4 NICs are no longer due.
Yeah.
So once you exceed state pension age, class 4 NICs are no longer due.
Okay.
So number 1, summarize the methods by which the loss arising in the period ended 30 June 2020 can be relieved. So please summarize, or just talk to me, tell me, make a few points. Aim is to get 4 marks out of 5. How can this 60,000 be relieved? What are the different ways?
It can either be used in the current year or carried back or even carried forward.
Can it be carried forward?
Oh no, because he's ceasing to trade, so just carried back.
Exactly. So you wouldn't get a mark in this circumstance for saying carried forward.
Yeah.
But generally speaking, yes, carried forward is available. Yes, you're right. You'll offset under Section 64 against current year or previous year. And then you just go on to explain. So explain a bit more detail, please. What else can you say?
Again, you mentioned about on ceasing to trade, this idea of terminal loss relief, so he can carry back the losses 3 years back on a LIFO basis.
Yep. Keep going.
As he's ceasing to trade, does that mean the losses can only be carried back to his trading profits rather than all income?
No.
No.
Current year and previous year loss relief and terminal loss relief can go against total income. Total income, not just trading income, total income. But then you'll have the cap under Section 24A on the higher of 50,000 and 25% of total income.
When does this cap come into play, sorry?
If you want to claim losses against total income, so not your trading income, but other income, for example, your rental income, could be employment income, for example, it could be state pension, then you have the cap. So against your same trade profits, there's no cap, it's unlimited. But against other income, meaning total income, you are restricted to the higher of 50,000 or 25%.
Okay. I actually don't know losses that well, so.
Okay, that's fine. So you mentioned you'll get a mark for mentioning that you can use the loss in the same tax year against. So the loss happened. In which tax year did the loss happen? 2021.
Yeah.
Okay. So you can use the 60,000 against the 24,000 and 7,000. Or you said you can carry back and use against 10,000 or 6,000. That gives you 1 mark, let's say. Okay. You can potentially say that carried forward is not available because you see things trade, maybe get half a mark. And then you can say that the claim to offset against current year or previous year would be or should be by the first anniversary of 31st Jan following the tax year of the loss, which is 2021. That's 2 marks so far. Okay, because you're summarizing the methods is 5 marks. You're trying to make as many points as possible. And then you would talk about terminal loss relief. So you'll say, because the trade has ceased, you can make a claim under Section 89 terminal loss relief. And the final 12 months, because this is period ended 30 June. So we actually have November, December, Jan, Feb, March, April, May, June, 8 months. But you can carry back 12 months, the final 12 months of losses against the previous 3 tax years on a LIFO basis.
Okay.
And that will give you 2 marks just for saying that.
Okay.
So we have 4 marks. The 5th mark you'll get for some further general points. You could have potentially mentioned that this may be adjusted for overlap profits, which they haven't given as a figure. No, in fact, yeah, if you want to work it out, you can work out overlap profits, and you'd say that the 60,000 is reduced by the overlap profits.
Okay.
Why? Because overlap profits are realized on cessation of trade or change of an accounting date.
Okay.
Any questions so far?
No, that's fine.
Then we need to do the computation or the calculation of the income tax and national insurance liabilities for each of the tax years, assuming that the most beneficial claims are made in respect of the loss for the period ended 30 June 2020. Now, when we say most beneficial, I'll just mention a few general points to you when it comes to losses. Losses are ideally offset sooner rather than later.
Okay. Why is that?
Yeah, so sooner rather than later. Why? Because there is more of a chance of receiving a cash refund from HMRC on tax that's already been paid.
Okay.
So you'd rather go back earlier because, for example, let's just say here we use the 60,000 against 2019. Okay, let's just say the trade was not ceasing, you were carrying on. Use the 60,000 against 2019. Now, that wouldn't be good because if you have a loss the next year, you've got nothing to offset against. So you'd rather go back further, 60,000, you go back to 80,000, for example, or 120.
Okay.
So then you have enough profits available if there are future losses. So for example, here, if you do current year, previous year, Why would you rather go to previous? Because if there was a loss the next year, then you can go to previous again.
Do you have to kind of stick with the same claim?
As in, no, it depends on the question, what's the most beneficial. Right. Because the other thing that needs to be considered is what claim will give you the highest cash refund from HMRC, or which claim would give you the biggest savings at the highest marginal tax rate. Because, for example, if 1 year your profits are 10,000, 30,000, and another year your profits are 150,000,
yeah,
you'd rather offset against 150 because you're saving tax at 40%, right?
Yes.
So that's the second thing. And the third thing is maximizing the personal allowance, or another way to think about it is minimizing the wastage of the personal allowance.
Okay.
So, for example, if one of the years you have 10,000 and another year you have 30,000, you would offset against the 30,000. Why? Because the 10,000 would have been covered by the personal allowance anyway.
Yeah. Okay, makes sense.
Okay, so these are general points to consider when you are talking losses.
Okay.
So then we have the calculation. Okay, no, we are first saying that we are going to make a terminal loss relief claim. Why? Because you want to carry back as far as possible. And we're saying the loss arose in the 2021 tax year. Can you see my Excel screen as well?
Yep.
Yep. Okay. And the loss was 60,000. Now, as I mentioned, we have to have overlap relief, overlap profits. So we need to do a working there. We started trading, commenced trade on 1st November 2015. So which tax year was that?
The 2015, 2016.
Exactly. And you went to the year 31st October 2016. So we have basis periods. Started 2015-16. So effectively we go from 1 November 2015. Where do we go to?
The April. Yeah, 5th of April. Or 6th of April, whichever one it is, but till April.
So on the actual basis, agreed?
Yeah.
So then we have 96,000 profits. November, December, Jan, Feb, March is 5 months. So 96,000 times 5/12. 40,000 was taxed in 2015-16. 2016-17, do we have an accounting year ending in the 2016-17 tax year? We do. So we simply take 12 months to 31 October 2016, which was
96,000.
96,000. So as you know, or as you can see, 40,000 has been taxed twice. Agreed?
Yep. Yep.
So overlap profits was £40,000.
Okay.
Therefore, your total loss is £100,000.
Okay.
Okay.
So loss has increased.
Exactly, loss has increased because we are getting relief now for another £40,000. So if this was profit of 60,000, then we'd take off 40,000 and we'd reduce the profit. But if you have a loss, you increase your loss so you can get the relief.
Okay.
Yeah. Okay. Okay, so I'm just thinking now. So cease to trade on 30 June 2020. So for terminal loss purposes, it's the final 12 months. So we'll take from 1st July 2019 to 30 June 2020. So let's do that now. And here we have terminal loss. So it's the final 12 months. Is it 2021 or 2020? 2020. So we will effectively be taking, sorry, can I just text my next student, please?
Yeah, sure.
I just want to let them know that. It'll be a bit delayed. Yeah, that's fine. So yeah, final 12 months to 30 June 20, 30 June 2020. So effectively, we have 2 tax years that's overlapping. It's overlapping the 2021 tax year, which is from 6 April 2020 to 30 June 2020. Okay, which is April, May, June. That gives me 3 months out of November, December, Jan, Feb, March, April, May, June, 8 months. So up until 30 June, that's an 8-month period. Just let me know if I'm going too fast or if you're unsure.
Okay.
I'm just gonna keep going, and then you let me know if it's all making sense. So 3 months out of 8 months times the 60,000 loss. Okay, and it's a loss, so it's minus. And then we have our overlap of 40,000. Therefore, we have 62,500. So this was just the general loss for the year, but terminal loss is calculated slightly differently because it's the final 12 months.
Okay.
So then we still need to have 1 July 2019 to 5th of April 2020. That's the remaining 9 months, I think. Because we've taxed 3 months, now we need to tax another 9 months. So that would effectively be the 2019-20. That would effectively mean 1 July 2019 to, we had year ended 31st October 2019, which is a calculation July, August, September, October, 4 months. So we have 4 over 12 times 54,000.
Why are we doing 12 months rather than the 9 months this time?
Because we're taking from 1st July to 31st October.
Yeah.
And we've been given figures for the year. Because 1st July falls in that year, right? So we're taking 4 months out of the 12
Whereas
months.
the other period was just an 8-month period. Okay, I'm with you.
Exactly. Yep. So we do equals 54,000 times 12. And then we do 1st November 2019 to 5 April 2020, which is November, December, Jan, Feb, March. So it'll be 5 over 8 because that accounting period was only 8 months, right? That period. I'll show you just now. So we're taking from November which is the start of that period, to
Oh
5th
yes,
of
till 30th. Okay,
It's only 8 months.
with you.
So that 60,000 is for 8 months. So then we do multiplied by, equals minus 60,000 multiplied by 5/8. So now we've taken the final 12 months. We'll just tally that up. $19,500 there, 62,500 for 2021. So therefore, total terminal loss relief, I'll put here, total terminal loss is that plus that, 82,000.
Okay.
Can you see how it differs from the loss without having the final 12 months? Just the normal loss for 2021 is different. Okay. So what we're trying to say there is therefore, what we're trying to say there is terminal loss is 82,000. So we'll relieve 82,000 by going back to one of these years.
Yeah.
Okay. But 18,000 will remain unrelieved.
Okay.
So with the 18,000, you would claim section 64, meaning against current year or previous year.
Okay.
So I would probably do it against current year because you have 31,000 there, less 18,000 would be 13,000. So you are still preserving your personal allowance and you are saving tax at 20%.
Got you.
The 18,000. The 82,000, we can go back on a LIFO basis to the previous 3 tax years. So previous 3 would mean, the current year and then the previous 3 tax years. So let's do another full computation now. We can effectively go back to because we have 82,000. I'm just looking generally, but I think by the time we get to year ended 31st October 2018, we'll have covered.
Yeah.
Because 80 and 54. So I'm going to start from the 18-19 tax year. This is what you'll have to do in your exam. You'll have to make a computation. Okay. And then here you can have your description. So we have rental income, state pension, trading profits. Trading profits. Notice I leave 2 lines here because you can offset against trading profits without any restriction. Then you have rental income, state pension. So rental income 18-19 was 410.24. $467. Okay, and trading profits for 2021 was nothing, 0. For 2019-20 was 54 and then 80. Are you following so far?
Yeah.
Now we want to claim this 82,000. Okay. So we'll tally this up. So we can see exactly how much we can claim. Okay, so section 89 terminal loss relief. We need to claim 82,000. So we start with the year of the final 12 months starting, so 2019-20.
Yep.
Terminal loss relief is against. I'm just thinking, is it? No, I think it is against total income. I'm just going to double check. I might be confusing myself.
Let me just check my notes.
Yeah.
I've got here on the memory jogger that it's against loss against trading profits only for section 89.
Okay, good spot. I thought there was something. It's just opening year loss relief is against total income, but terminal loss relief, good, is against trading profits only. So here we'll take off 54,000 from there. Happy with that?
Yep.
And then we have 82,000 difference with 54,000 gives me 28,000 from the 80,000 there. Okay.
Yep.
So we have made our terminal loss relief claim.
Yep.
Then we said you do a section 64 loss claim for the balancing of the 18,000.
Yep.
And you do that against would you do that against previous year 16,000 or against current year 31,000?
Current year as previous year 16,000 will get most of it will be covered by that 12,500 personal allowance.
Very good. So current year. So we just do minus 18,000. So effectively you've preserved your personal allowance and you've saved tax at 20%. Auto sum there. That gives us that.
Okay.
Sorry. You'll have your personal allowance still. 12,500 fully available. 12,500. 12,500. I'll email this over to you. So
thank you.
And those are your total taxable income.
Okay.
How was that?
Yeah, that was once you've losses aren't my strong point, but once you've gone over that, it actually wasn't too bad.
It's not too bad. Seriously,
yeah.
You just need to break it down and take step by step with most of these kind of questions anyway. And obviously you can't get them proper crappy questions which just completely throw you off. But again, when you come back to the basics, think about what's happening, read the question a few times, then you can sort of apply step by step. So you saw how we did. We did the general loss, then we did the terminal loss, and then we sort of made a table and we claimed the loss. Now, the question does not end there. The question says income tax and NIC. So then we start with these figures, 47,500 for each of the tax years. So we just do, yes, we can just start straight. So we can just do 37,500 at 20%, which is 7,500, and 10,000 at 40%, which is 4,000. So for the income tax would be 11,500 in 1819. And then for 1920 is simply 3,500 at 20%, which is 700. And 500 at 20% for. So effectively, we made quite a few savings.
Yeah.
Because previously would have quite easily been a higher rate taxpayer in these years. So we saved tax at 40%. So that's your income tax liability. And then your NICs will be class 4. So class 4, we said, so for class 4 NIC purposes, you'd look at the start of the tax year, so 6th of April. And if you have exceeded your state pension age, then no class 4s are due. So he reached the age on 5th April 2018. So for 1819, you'd still have class 4, but on the first day of these tax years, he'd have exceeded the age. So no class 4 liability. So I'll just say no class 4, no class 4. But for this amount, this 47, the 80,000, class 4 is on the trading profits. You will have class 4. However, you can reduce it by the loss of 28,000. So we'll say 80,000. So say profit, trading profits. 80,000 less the loss. 52,000 is subject to class 4. Then you just use your tables and you'll do your thresholds. You'll do whatever the thresholds are, and then you'll add class 2 NIC.
Okay.
So are you okay with the thresholds?
Yeah, I've got them in front of me.
And in class 2 NIC will simply be 52 weeks times £3, I think.
Yeah, £3 5 pence.
£3 5 pence. Yeah. Any questions?
No, that was okay.